Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I am going to talk to Julie Hawley today. Julie helps people find their freedom through multifamily real estate investing so they can live their life of their dreams. She has invested in single family homes to house hacked to manage properties from 1,000 miles away and passively invested in multifamily assets. Currently, she is invested in nearly 300 doors. Welcome, Julie.
Hey, it is so great to be here. Thanks for inviting me to the show.
Absolutely. Tell us something interesting or funny about yourself.
Oh, I think the most interesting thing people find is that I grew up in outside cities or I've lived in cities, and now I live in this teeny tiny town on the Canadian border in Idaho, and there's like 2,500 people. So I went from living in a city to having literally like 18 to 30 chickens at any given time.
Oh, that is funny.
It's the Wild West.
When and how did you start investing in real estate?
I was raised in a residential real estate family. So real estate was never something that was foreign to me, but investing was. And I bought my first fixer upper in my early 20s, and then just thought, my husband and I decided, hey, let's just continue to buy homes and we'll just rent the previous home out and we'll live a modest lifestyle and develop this real estate portfolio. And that was our gateway into investing. We were trying to find some way to invest in real estate that was manageable. There were no podcasts back then, and we didn't have any contacts. So we were like just scraping around trying to figure it out.
And when was it?
That would have been, well, golly, over 2 decades ago.
Oh, wow.
So,
Wow. That was a while ago.
Yeah, I have a birthday this month, so I'm like, oh, that was a long time ago.
So, Julie, we discussed about when and how did you start investing in real estate. Why did you choose real estate though?
I think back then we saw it as something that we could control, and something we were looking for, something some way to diversify our portfolio. We both had retirement funds. And so it was like, well, here's something that we can figure this out. We'll let the financial planner figure out the stocks, but we can figure this out. So the barrier to entry, it felt very comfortable. It felt like something that we would be able to enter in and learn about and grow within while growing our wealth. And so that was the initial impetus to get in. And additionally, we really had a heart even then to pour back into people. And so we knew if we were the landlords, then we would be able to select our residents as we chose. And that sometimes people need an opportunity in life, and sometimes people don't look good on paper, but we would be able to go down that path and give people a second chance, if you will. And so there were a lot of factors pouring into it, from the financial factors, from the learning factors, from the philanthropic kind of mindset as well.
No, that's great. So you started with single family. When did you switch to multifamily, and what was the catalyst?
Not soon enough. So that was it. When you were a landlord and you're maintaining your own properties, and we had properties that were 1,000 miles away at one point, and it was just a matter of, do we really want to invite all of this in? And for me, we had our children, and it just felt like so much stress, extra additional stress. It was nice having the passive income, but it wasn't passive income. It was income that I had to monitor, and I had to make sure things were working well in the properties, and that we had the proper residents. And, there were strings attached to it, and I had a lot going on. And my husband and I we just saw, like, is this really the route we want to go? Do we really want a whole bunch of this in our life? And so we decided to just kind of walk away from single family. Let's just sell this. We didn't have a huge amount of property. So it's like, okay, we'll just sell this and let's find another way to invest. And we kind of put ourselves in a holding pattern and started doing some research. And 2 years ago, that's when I learned about real estate syndication. And it was like this, just like lightning moment for my life. I have a background also in education for elementary. So it was just like, this is all of my life, all in one spot. You know, the heart of a teacher, the love of a real estate investor, like just comes together all in one picture.
Oh, that's great. So, before the podcast started, we were talking about impact investing. What is impact investing?
Yes, impact investing. The name of it is starting to get traction out there, which is really exciting. And so right now, I think it's going to sound different to a lot of different people. So at the bare fundamental level, right, impact investing would be mixing purpose with your profits. Like on the fundamental level, we're not just investing for the profit of it. We're investing with some level of intention to help other people in the community.
That's a great point. And yes, as an investor, we can invest in stocks where you don't control your money, but I can invest in real estate or somewhere else where not only I make money, I get cash flow, but also I'm impacting someone's lives, right? So uh, that's how I decided to invest in a coffee farm in Panama, because the coffee farm company I'm working with, they pretty much take care of those farmers. They build schools, they build houses for them. So whenever I'm investing, I'm also looking at the other side of my investment, that of course we do want to everyone wants to make money, right? But is that going to help someone else as well, right? Is that money going to change someone's lives, right? So now I focus more on mobile home park, and that was the reason, because we have always heard trailer parks, there is a stigma behind it, and I wanted to invest because I want to see how I can help the people who cannot afford to live in a single family house, or even cannot afford to live in a one bedroom apartment, right? So I think that's what you're pointing to, right?
Exactly. And here's the thing is that we've had these it's usually been one or the other. And it's like, okay, well, if you want to invest, if you're an investor, well, you're all about the profits, and you're just this greedy person who just wants to fill their pockets. And now there is really this growing awareness that, you know what? There is nothing wrong with me making a profit. There's nothing wrong with me having a return on my investment. And the benefit here is that most people want to do something really great with their money. Most humans want to help other human beings out. And when they are able to invest in this way, they are able to invest, make an impact right now, immediately on those residents, on those lives, which also has a ripple effect into the community. But additionally, they're getting a return off their money. What do you think they're going to do with that return off their money? They're probably going to use that return off their money to reinvest into something else and cause more impact. And so that to me is like the full circle. And you know what? Hey, vacations are important too. So there's nothing wrong with people taking, some of their earnings and having fun. But, the heart behind a lot of people in impact investing is, let me have my money doing multiple jobs. It's going to make me money while it's doing some work. And that work is a level of philanthropic. It's philanthropic, right? What's interesting also is that there is this growing awareness that we don't always know where our money is going when we turn it over into a nonprofit. And I love nonprofits. I write grants for a local nonprofit as a way of supporting what they're doing. I believe in them. I know how that is run, but there's something different about when I invest in real estate. I know where I can go. I can see the property. I can see, just like you investing in, coffee farms, like, you can see the exact impact of your money and you know exactly what's happening with it. And sometimes we don't know. I love particular organizations that go and help, when there's disaster relief type of organizations, but I don't really know. I don't maybe feel
Right.
that connection. And a lot of people really want to feel connected to the purpose of where their money is going. And this allows that to take place.
No, that's a great point. And I was just remembering at the same time that, when you are investing in a stock, right? And I buy stock of Bristol Myers Squibb, or that's a pharma company, or let's say I buy stock of a cigarette company, even though I would not smoke, but I would always think, oh, more people should smoke so that, the price of the stock goes up, right? So it has the detrimental effect, right? It's not the same as investing, buying a distressed property where the people who are living there, they have not been taken care of, right? They are living in pretty much like a slum, and you go turn around the property, you bring more amenities like, let's say, soccer field to pool, and now the kids, they are living there, they can enjoy their childhood, right? And not just roam around.
That's right. What's interesting in what you're saying also is that when you're investing in impact investing through real estate assets, you're getting all the benefits of holding real estate as your own. So you're having the appreciation, the depreciation, you're having the tax benefits.
Right.
See your CPA. I'm not a CPA, right? There's our little asterisks.
Right.
We have the money that we're gaining off of rents. We have the money at the income produced at disposal. For everybody, if you're watching on YouTube, that's I had to switch to my phone because I'm in North Idaho. So you just tipped. But we have all of those amazing income producing vehicles in the real estate. When you're invested in the stock market, you're on the ups and downs. And if you dispose of those stocks, you're going to be taxed on it. You don't really know what's happening with it,
Right.
even if it's something that's going to do something good potentially. So there's a lot of control that comes into play when we're investing in real estate. And then specifically when we add that impact investing, that purpose and profits investing, we just up the caliber significantly. And I was going to throw in there that some of those ways of, there are so many different ways to go about impact investing. And the more investors that I speak with, the more I hear, people are very creative with how they are going about this, from motel conversions that with the intent to provide affordable housing and not necessarily government assisted affordable housing, to converting schools, to having a rundown D property, turning it into a nice C+ property, and then offering classes to teach those people, hey, let's teach you how to manage money, let's support you in this way. So there are a lot of different ways that people are going about the impact investing.
That is a great point. I did not think about that. There are a lot of other ways to participate in impact investing. So how do you personally participate? Mostly, is it through multifamily? And can you share an example?
Yeah, it is through multifamily. I am partnered up right now through my personal investments that I have right now are not strategically placed in this impact investing way. And I'm very authentic about everything. I was honestly, and maybe other people have been told this, I was told you can't do that. You can't. And I actually interviewed somebody on my own podcast, and it just resonated. He was doing this, and it just blew me away. And I followed up and connected. And from that, we have actually banded together a few of us to start the basis of an impact investing network so that we can pull people together, exchange ideas, and teach other investors that this is possible. You can have profits, you can have purpose, you can combine the two of them. Because when you're out there alone and you're trying to figure it out, you might be like me, where you were told like, no, this isn't possible. So now I'm connected with a lot of operators who are successfully marrying everything together and successfully doing impact investing. So Right now, I am creating this network with two other sponsors. Well, one other capital raiser and a sponsor. We're pulling everybody together so that we can really do a huge impact within the multifamily space to spread the word that we can do this. And there's nothing wrong with having, a Class A, or new development. There's nothing wrong with anything. It's just, there are a lot of people that have a lot of heart, a lot of passion, a lot of people that were like me where they're told no. And now I'm seeing green light, green light, green light. Guess what? I can raise money for this.
That is awesome. So let's definitely discuss about this after the podcast is over as well. I would love to know more because I'm all about impact
Yes.
investing.
It's so powerful, and it changes lives. And what happens, right? If you can give somebody just those basics, we all have our basic needs that need to be met. We need shelter, we need safety, we need these things. And when people have those basic needs met, they respond in a different way to the world around them. And so, the underlying concept is that if we can serve people, if we can help people have that shelter, have that security and the stability, then not only are they stronger people potentially, especially if we can pour in some classes if they would like, but now we have that rippling out into the community,
Right.
and changing lives.
Yeah, that's exactly, it's like tsunami, right? Because once you start from
Yes.
one and it would go, and no, this is awesome. So
That's
let's,
what I was going to just throw in real fast that's funny. I've told people, I'm like, I just want this to be a tsunami wave. I've literally said this. I want this to just sweep across in the good way, not the destructive way, but to just sweep across, because we see so many people struggling. And what I noticed growing up, outside San Francisco, as we talked about, I grew up in Modesto, right? So it's inland quite a ways, but
Yep.
I felt that influx of with the highs and lows of the real estate economy, people coming and going
Right.
based on affordability. When I lived in Denver, I watched the Front Range expand. I'm invested in Huntsville, Alabama,
Yeah.
and
Yeah, I
that
love
is
that market.
expand.
Yeah.
Oh, it's a great market. It's expanding though. And when these expansions happen at a rapid rate, people get displaced.
Right.
And so when I started seeing that in Huntsville taking place, I was out there in September of 2020, and you could see it happening, and the writing on the walls. I'm like, okay, I've seen this in the San Francisco Bay Area. I saw this take place over in the Denver area, the Front Range. Like, what can we do about this?
Right.
Because our working class, they need a place to live, and they can't go commute for a working class job. They need and the community needs them. The community needs everybody. And so creating this
as
is
a community, we need everyone. And
Do-
that is a nice word for it, right? Gentrification. So there are good side of the gentrification, and of course the bad side of it as well. Because as you said, some people would not be able to afford the same area they were able to afford to live in before.
yeah, yes, exactly.
This is great. So let's talk about real estate deal. Can you talk about your best real estate deal so far?
Oh, well, I have not gone full cycle, and I'm always fully transparent. I feel like everyone needs authenticity in the world. So
Yes.
I've invested right in the single family. I've done really well with those. I mean, I could talk about, having the house like down to the roof, like remodeling the complete house, having the contractors, and turning a nice profit after renting that out over a period of time. That was really nice. In multifamily, I'm passively invested. I'm turning with impact investing into the active side, which is really exciting because I love passive investing. Oh my goodness. I love passive investing. However, this type of passion, this kind of heart for something requires active hands-on.
Yes.
Let me get involved here. So that's where I'm headed.
That is great. And Did you have a worse deal, or maybe that the deal you passed, maybe
I'll
that
tell you
wouldn't have
what,
worked
I
out?
I
And
definitely, oh yeah, did you see how fast I have that? I'm like, well,
yeah,
we
I can
did
tell.
well on everything else. I feel like the doing well part, like that just kind of goes without saying. I feel it seems that most investments really turn out well,
Right.
and so it's like, yeah, of course it turned out fine. All the
Yeah.
remodelings, the remodels, they took longer than expected. Whoop-de-doo, that's no big news. But the profits were still there. Great.
Yeah.
But
Yeah.
I'll tell you what, who talks about their worst deal ever,
Most
right?
of the people
So
don't.
yeah, yeah. So I'm like, I used to, when I was a classroom teacher, I'd tell the students the learning is in the struggle. That's where you
Yes.
learn the most, not when
Learning is
you
in the
like
failings, right? When you fail, that's when you figure out.
that's right. But you remember Albert Einstein, you haven't failed until you stop trying. So
Yeah.
but yeah, we had a really nice condo in Denver, Colorado. Well, technically it was in Glendale, which is like literally
Suburb.
in the center. It's in the center of Denver. It's unincorporated.
Ah,
Yeah,
okay.
so it's not even a suburb. It's called the Village of Glendale, and it's where the it used to be the nation's busiest Target was in that suburb because Denver
Oh,
itself did
wow.
not have a Target. It was in Glendale. So
Ah,
yeah, get this, our little quarter square mile community had quarter, right? Quarter square mile community had the international rugby field. It had like this
wow.
really rip roaring Target. So we had this condo there, and again, going back to take time to become educated. Well, podcasts were kind of newish back in that at that period, and we decided to sell this condo. And I will tell you, the thinking behind it is not thinking that I have any longer. And now I have all the connections in my network to where, okay, this is who I would talk to. And these are the investors that would help guide this decision. But we made a decision based off of taxes instead of based off of a lot of other decisions, right? So we made basically, we broke our own rule. It wasn't really a fear-based decision, but we thought, well, the market's supposed to, should be capping out here. And so let's like time this right. We'll sell it. We won't get hit too hard by taxes. We just had a lot of misthinking. And now, since we sold that property, since I learned about syndication, right, and all these things, I have also since learned about the Burr method, right? So we could have easily bird that property and pulled the equity out and still been invested in it. And unfortunately, you don't know what you don't know.
Oh,
And
yeah.
so that is
And
the only transaction that I have ever had that just it stings so bad. Like we
yeah.
timed the '08 crash. We got out of a house we had in California, like literally probably the week before everything completely collapsed.
Wow.
And that home that we sold for 230 was on the market later for 110,000.
Right.
So
Of course.
the Denver though, we always go back to Denver, like, oh.
Yeah. So I could relate to this story because I have done exactly same as what you have done and sold a townhouse here in Bay Area. And yeah,
Oh.
yeah. And I sold it in 2015 to invest out of state. And of course, right now it's ridiculous. The prices have gone up like crazy, crazy. So yeah, I had bought it for 450. It was at one point down to 300, and we capped it because I wanted to break even. When it hit 450, we sold it. It's like over, I would say 700 right now. And I could have, as you said, pulled the equity out.
And so what do you tell yourself?
No,
How
that's
do you
it.
console yourself?
So, yeah, and actually, I don't tell myself, but every time my wife tells me, "Oh, you are investing, but see, we should have made more money," and I'm like, "No, we are not." One thing is, we are not going to impact a lot of lives by investing in a single family, right, or townhouse.
That's right.
Yeah, and the second was that no one could had crystal ball to see that this would go like this, right?
It wasn't supposed to continue on.
Exactly, but the government, right? If we keep printing money, keep pouring money into the economy, this will continue. Like yesterday
That's
only, we got the $1.9 trillion. So this will continue. The
oh,
stock
don't.
market, real estate. So
Oh
yeah.
my gosh.
So
That's
that's
so
what I
terrible.
tell myself that I did something else, and it's so far working out too. So it's not that end of the world.
And that's what my husband reminds me of that. When I start to get bummed out about it, he will
Yeah.
remind me that we use that money to invest in multifamily
Yes.
passively. We've
Exactly.
used that for investing in real estate and also investing in our own education so we don't make other dumb choices.
Exactly.
And the message to everyone is have a strong network, get some education, and before you make any decision, just run it by somebody that you really trust. And
Right.
we didn't
Yep.
have that person. Everyone
Yep.
in our life was single family, kind of smaller, just not thinking in the same way that we were.
That's awesome. Let's take a quick break, Julie, and after the break, we'll go through the same questions I ask every guest.
Fantastic.
You're listening to the Wealth Matters Podcast.
The Wealth Matters Podcast.
For more info about what we do, check us out at wealthmatters.com. It's wealth, WEALTH, matters, MATRS.com.
Welcome back to Wealth Matters Podcast. And Julie gave us pretty good idea about what impact investing is and how you can impact other people's lives by investing in real estate. Julie, are you ready for fire round?
Yeah. If I can handle all of the investing things and selling that place in Denver, I can handle the fire round.
Yeah, you can handle anything.
That's right.
Let's go. Would you be changing any business or investment strategy after coronavirus is over?
I will not.
So whatever you are doing is working out.
I like the trajectory that I'm headed on.
Awesome.
I have some good diversification and I appreciate that. I'm just going to keep doing that.
That's great. Favorite real estate or finance or business book?
That is so difficult. I just finished reading the Introvert's Edge, and
I have not read that book.
I'm probably clearly to the audience, I'm clearly an extrovert, and yet this book this book actually exposed that I think I have some introverted areas in my life or some skills that I could grow from, and it is changing the way I am viewing things and allowing me to see the actual need for really strong systems. There's a difference. I was telling my team this morning, there's a difference between being organized and having a system. And that was a huge takeaway. It's like, oh, I'm super organized, but what's the system? What's the process? Yeah. I highly recommend it. Even if you think you're an extrovert, like I am, like just read the book. It's phenomenal.
Okay. I got to look into it for sure. Any tool or website you recommend or you cannot live without?
Ooh, Data USA.
Data
I think
USA?
That's the site. Have you been there?
Yes.
It's really fun. I kind of nerd out on the details of it. And just seeing like the little minutia of, oh, wow, there are that many people, working fast food. I mean, you can really get down into the granular on a community. And I enjoy that.
That's great. Any advice for beginner investors?
Learn. Your education is absolutely worth it and will prevent you from making mistakes. So listening to podcasts like this and going to seminars, expanding your network, it is absolutely worth it. And don't be afraid to reach out to people. You hear somebody on a podcast, you hear me, just reach out to that person, because people in this space really, truly are genuine and truly give back into the community. And you can definitely leverage the people that you listen to and the books. You can leverage all of that so that you won't make the same mistakes and that you can actually just collapse those timelines and go further. So I think, and don't be afraid. I told someone recently, don't feel guilty, bad, or dissuaded from putting money into your own education. We spend all this money into college education, and we might, like me, I went and I became a school teacher. I am now dealing with, millions of dollars, not just like this little amount of money. So imagine, like, it's worthwhile to put, to become educated and to pour your money into that investment.
Totally agree. And of course, as you mentioned, work with a mentor or a friend who has done it before, so you don't have to reinvent the wheel.
Don't reinvent the wheel. I
Yeah.
tried. It will break you. No, I'm kidding.
Yeah, no, I know.
Yeah.
How do you give back?
How do I give back? I give back in a lot of different ways. I have what's super fun. I have a book club. It's that is a phenomenal way to give back. A lot of people have meetups, and those meetups are really great, but some people need an anchor point. And so I inadvertently started this book club that's now entering. Here's what we're reading: Story Brand. That's our next book. And so that's one way I give back locally to my community. I write grants for a local nonprofit for trail development, because just like we can impact people through their housing, providing ways for people to recreate outdoors safely and conveniently also has a really profound effect.
That is awesome. How can my listeners reach out to you?
All right, you can reach out to me over on LinkedIn. I respond to people who reach out to me on LinkedIn. And also, I don't know when this will air, but my website is being rebranded, redesigned, and I'm super excited. My podcast, Ask Me How I Know Multifamily, will actually be housed on the same website as Three Keys Investments, my company. And it's going to be like welcoming everybody to my house, because those are my two worlds. So I'm super excited.
Now, I'll put that in the show note. Thank you so much, Julie. I thoroughly enjoyed the discussion.
Thank you. This has been a lot of fun.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing.